Ladies and gentlemen, welcome back to the show. And today it's an emergency YouTube video because there's an emergency meeting by the board members of the Federal Reserve because the inflation rate is 7.5%, the highest since 1980s, and people are freaking out. I mean, the Fed is freaking out and businesses are freaking out. A lot of people are freaking out, so they have an emergency meeting scheduled February the 14th. This is Valentine's Day. Now, it's a closed board meeting, which means we won't find out what the details are. But there are some things that are important to realize here. It's unlikely that they raise rates intercession because it shows panic. And panic is not what they want on the streets, right? They don't want us panicking. Investors like us, if we start panicking, we take money out of the market. And if all of us take the money out of the market, that's when things hit the fan in a meaningful way. That's when we see a bank run. That's when we see the markets crash, like really demolish. So it's unlikely they're going to decide to raise rates intra-session. It's unlikely, at least. It's more likely that they determine what they want to raise by. Now, today there was some news that one of these guys wanted to raise. It's St. Louis Fed President James Bullard said he was open to a 50 basis point hike in March. Now, 50 basis point hike is quite a bit. That definitely shocked the market a little bit. And I think that's going to be troublesome if that happens. But the two more, the president at Atlanta, Virginia, and Richmond and San Francisco pushed back against the idea of a double hike. And one of them was like, listen, I'm open to the idea, but I really need to be convinced if this is the right thing to do, which makes sense, right? Like, to be so hardcore about it might be a little much. He also mentioned that it could be a tough environment right now for risk assets as the Fed embarks on tightening cycle. And so, you know, what you want to tie this to is something like Bitcoin is a risk asset. And let me explain why it's a risk asset. A lot of people do leverage. I don't do leverage. I hate leverage. I'm a dollar cost average guy. I just want to dollar cost average into the market and play it really safe. But people essentially gamble by going 100x, even a 10x. Like, you can get liquidated and absolutely, like, demolished, right? So, and this is where it's, I don't know, I'm not sure this is so great because, like, let's say you short 100x and, you know, stuff starts falling apart. You're going to have to buy your things back, and then that's how you get those short spikes. But if it costs more to take out loans like that, you're going to see less of that, which is good news. But that also means the growth of something like Bitcoin is going to be reduced. We're not going to see this frothy growth that we've experienced, like where these these hockey stick curves. You're going to see less of that. Though in early 2020, interest rates were like 1.25%, right? And we still saw this beautiful up. So the interest rates were definitely higher. But everything's relative, right? We've been used to 0% interest rates for a while, and now we're going to switch to, you know, what, 0.5 maybe at the most, or 0.25 as our first increment, and there might be up to 7. I've heard up to 7, but it's unlikely. More like 4 interest rate hikes, so 0.25, then they'll add another 0.25, take it to 0.5, then another one to 0.75, then maybe one more to 1. Then at the end of the year, we'll end up with a 1% interest rate, which is not great news for these people that are, you know, risking it all kind of thing via leverage, which is not great for us either, because then we don't have the opportunities to go, you know, spiking up like these super high highs really fast, which is okay as well because we get less volatility, right? So there's so many different perspectives to this. It's very interesting. I'm just gonna drink this water because obviously I'm losing it a little bit. Now, I'm going to talk about that in a sec. These are two contradictory articles I found on CNBC. So the Fed is likely to take a measured approach to the rate hikes despite calls for bigger action. Makes sense, right? The bonds are, short-term rates are spiking, so on and so forth. Yeah, okay, great. So, and then this guy, on the other hand, is like, oh, listen, says the Fed is obviously behind the curve, will raise rates more than expected. So, let's see what happens. I don't think we'll find out what happens on the 14th, but we might have some leaks. We might have a better idea of what's happening, and you know, we'll see. But this is probably the more interesting news. I mean, things are pretty volatile right now. We saw a 500-point drop because Russia might attack Ukraine. And who says this? The State Department. They released a video today saying that it was like a live stream, essentially. Hey, listen, we think that, you know, this is going to happen. We think that Russia might invade during the Olympics. Now, if Russia invades during the Olympics, boy, are we going to see this thing come down. Right, we're gonna come down. I don't know how far we're gonna come down, but we're definitely come down. And we're already coming down. We're down. This is a daily, so today's not been a great day. Yesterday was not a great day. Let's see what we're down about. From the peak of yesterday to now, we're down about 8%. So, you know, take that to the bank or something. I'm gonna dollar cost average right after this video, because I'm gonna buy it right here. And we'll see what happens. Like, we'll see. If Russia invades, you will definitely get a better deal on Bitcoin, and you can definitely expect miners to reduce and a lot of things to get weird. There's a great video by one of the guys at a former Vox, I forgot his name, a former Vox employee made a great video on why Russia or Putin or Russia feels the way they do about Ukraine, right? I think it's Ukraine. I think that's how you actually say it. And we in the West, we call it Ukraine. But Ukraine is like deeply tied to Russia. In the Soviet Union era, it was like they had like prime ministers and presidents and everything that were like culturally very assimilated in, not like Kazakhstan or something. Where like the similarities are much less, you know, tight. Ukraine was like if like Alberta decided to leave Canada, or Quebec not Quebec, let's say Alberta decided to leave, well, maybe Quebec. You know what? Here's a better example. Texas leaves the States. If Texas wants to join Mexico, which is kind of the vibe with Ukraine wanting to join NATO, the States are going to be like, hold on a sec, you're going to join the other side and like on this armed front against us? It's like kind of a jealous boyfriend sort of situation. That's kind of the scenario. So like Russia's kind of like, I don't think so, dude. Like I'm not going to let you like join the other side, like join NATO and like have NATO and the States and everything drop like weapons into Ukraine to protect against a possible Russian invasion, which is why they're posturing the way they are. Russia wants Ukraine back because it's historically belonged to it and there are deep cultural ties. If I was to put a bet on this, I would say that Russia is probably going to invade Ukraine at some point. I don't know when, but boy, they got a lot of things on the sidelines there. That border is perfectly amassed. Like the amount of troops and things ready to go are like very ready to roll. So we'll have to wait and see. If it happens, it'll be very interesting for us, especially if you're dollar cost averaging. Our markets are going to absolutely sink. Like, I would not be surprised if we hit a 30K, and if things got really bad, maybe even lower. I'm not sure. We'll have to wait and see, but, you know, many things are very possible. Markets are still crashing as we speak. And we're back into the green zone, so I would, I'm going to definitely dollar cost average as soon as this is done. Checking the dollar cost average, we should be up a little bit. Let's see what we are. Okay, we're at 10 now, so okay, great. There you go. So we're supposed to be 2 in, but it's whatever. Yeah. Anyways, this thing's a bit of a pain. It doesn't track as well as I'd like it to. But yeah, okay. So these are the updates. I think I don't really have much else to say except that if Russia invades, expect the things to crash. Expect everything to crash. If interest rates goes up, expect things to be troublesome as well, especially if we keep our correlation with NASDAQ, though it's broken off. Actually, this is an interesting article that I read. Here's why Bitcoin traders shouldn't overanalyze US inflation data. And the reason is things aren't as correlated as you think it is, right? This is the BTC with S&P 500 at the top, BTC with crude oil and the green, and then BTC with TIP ETF. I don't actually know what that is. I'm not going to look into that right now. If someone knows, please. Oh, it's TIP bond, so that's the bond market. If you cherry pick, you see correlations. Like from August to October, there was a correlation here between the S&P and BTC. But it's obviously not like, it doesn't say strong. Like it's like a high correlation, then a low correlation. So I wouldn't say this is correlated, right? This is like an on and off thing. So very interesting, right? I'm gonna keep you guys updated on this. I'm gonna read more into this and get back. But here you go. This is CPI with Bitcoin, and this is on the logarithmic curve. And yeah, of course, it looks correlated, but it's really not. Like, it's a low correlation. So I don't know. Obviously, this is like kind of boggling my mind. Like, I don't really know what to make of this. But anyways, let us see. I'm going to switch the content from daily news to how-tos. And the how-tos are going to be things like, you know, how to set up a wallet, how to buy Bitcoin without anybody knowing, how to buy Bitcoin, period, right? How to use a hardware wallet, these kind of things. This is what I'm going to start doing. So if you're into that, and stick around. If you're not, I understand. If you like these news things, let me know. But aside from that, I think this is everything I wanted to say today. I don't want to keep rambling on. But we're back in the green, so continue your DCAs. We're in a good zone. And continue DCAing because we don't know what's going to happen. If Russia invades, you bet this is going down. And as we're going into some uncertain territory, the likelihood of a recession after inflation is begun to be taken care of is high, right? And the reason is when you raise the interest rates, taking out loans becomes difficult, so you can't do expansionary things like you did before, and that's going to slow down the economy. Now, if it slows down, what do you think the Fed's going to do? They're going to raise the rates because they can't have the market. I mean, they can't have our economy slow down. So that's interesting. So we might see a couple quarters of slowing down, and you might call that a recession, but I don't think it's going to be endemic, right? I don't think it's going to be like hysteric. I think it's going to be a short thing, and then they're going to start reducing interest rates again because they need to stimulate the market. And once that, you know what's going to happen. Once they get back to zero, they're going to take it back to MMT, modern monetary theory. And that means printing money. And you know what that means? That means the homie that's making $60,000 a year is going to go broke because his milk is going to go from $1 to $2 because interest rates are going to rise again. And this is how, if you've ever heard of that book by Ray Dalio, the latest one, I forgot what it's called, he talks about how this is how empires generally fail, right? They end up printing money and overprinting money because they don't have anything else to do. They don't have an alternative. I'm getting very animated, but this stuff is very interesting to me. I find it phenomenally interesting. The writing's on the wall, right? You're going to raise rates. Output's not going to be enough. And you need the output to be high to do debt servicing. So, and then there's another issue here. So it feels like the states are prompting Russia to invade, right? It feels like it. Now, you might wonder why they might be prompting Russia to invade. Well, there's this thing called the petrodollar. And the petrodollar is you want your currency to... So the U.S. basically made an agreement with the oil-producing nations, most of them, and said, hey, listen, denominate your stuff in U.S. dollars. It's great for the U.S. It's great for us, because then all the oil is purchased with US dollars, and we don't need to earn US dollars. We just have US dollars and just go ahead and buy it. Now, if a country chooses to sell their things in something aside from US dollars, that's problematic for the US, which is why they go and invade countries. Example, Libya. Example, Iraq. So Russia has definitely been doing this. China's definitely been doing this, and other countries definitely want to get on board this. It historically is what the US does. Anytime a country decides to switch, they go and invade. Now, Russia has a lot of sanctions, but it may not be absolutely wild that, you know, the states and Russia go into some kind of war. And if we are at the precipice of World War III, I mean, that's what a bold statement, right? The precipice of World War III. But I wouldn't fully doubt it, right? I wouldn't fully discount the concept of World War III. And the reason is when nations start to fail, and I don't want to be that guy shouting, you know, World War III, so on and so forth, but when nations start to fail, it's like the big tough guy. The big tough guy, he thinks it's so cool, it's like slamming the door and everything and all that kind of shit. Well, when he realized there's a bigger and tougher guy in the club, he's gonna get a little nervous. And if this guy's insecure because he sees that, you know, things are actually changing, he might throw a temper tantrum, right? Maybe take a preemptive move. And of course, I'm definitely like projecting into the future. I mean, I have absolutely no idea, right? Of course, but entirely possible, absolutely possible. So, we'll have to wait and see. I'm not sure if this is gonna happen. I mean, I doubt it. Like the probability of this happening is a tiny percentage. But during these exchanges of power is when things go sideways. And I've read this in the Ray Dalio book, and I recommend you read these books. I think the Ray Dalio book is The Changing World Order. Super interesting read. But yeah, anyways, this is what I want to talk about. Bull market support band, so we've moved away from it, and we've come down a little bit. And let us see what happens. I still have my happy faces up here because I believe we're still going to make it to some of these things. I'm not fully convinced that we're out of the woods. We have a long way to go until the end of this year, so let us wait and see. I will see you guys tomorrow.